Mutual fund expense ratio. This is Ken Boyd. So if you're selling lemonade, putting your stand 100 feet from a playground is probably smart marketing. But business comes with costs, obviously, and the expenses you incur each year, which is a crucial point for this discussion, can sharply reduce your profit. And the same is true of mutual fund fees and expenses because they lower your rate of return. These fees make a huge difference in your earnings. So there are three types of costs, basic costs to buying a mutual fund. The first is the sales charge, the cost you pay when you purchase the fund. The sales charge or sales load may be assessed when you buy the fund or when you withdraw funds after a purchase. The annual expense, which is really what we're talking about here, is the cost for the day-to-day management of the fund, like accounting, legal, and money management. It's based on a percentage of assets under management. Finally, the 12B1 fee, which is a marketing and distribution fee, also comes out as a percentage of assets under management. It's used to compensate the salespeople for monitoring the fund's performance and answering questions, essentially providing service to the investor. So when it comes to costs, investors should use the mutual fund expense ratio to assess the true cost of a mutual fund. And Bankrate defines it as the cost of owning a mutual fund or an ETF. It's a management fee, as I mentioned earlier, paid to the fund company for the benefit of owning the fund. And importantly, the expense ratio is measured as a percentage of your investment in the fund. So here's an example, the ratio. If the fund charges 0.45%, you'll pay $45 for every $10,000 invested in the fund. Now, what's important is this fee is charged annually. So if you own the fund for 30 years, you're paying a fee every year. So let's explain it a little further. How do you find the expense ratio? Disclosure of the fund's costs is most easily found if you go to the website. So American Funds Washington Mutual has been around forever, a very large mutual fund. This in the middle of the page are the fees and expenses that you find as of August 25th, 22. You'll see that the fees include the management fee, other expenses, 12B1 fees, and we add all this up. This is the stock symbol, the symbol for the mutual fund, AWSHX. That's the trading symbol, and you'll see the expense ratio is 0.56%. That is lower than the expense ratio for other similar mutual funds, and they include all those funds in the Lipper Group. This set of mutual funds that are similar to Washington Mutual on average charge over 1% a year. So saving 0.45% a year as you grow more and more assets can make a huge difference in your return. Remember to always consult with a financial advisor, and you can find other great content on accounting and finance. You go to conferenceroom.com right here.